The stock market crash. What Trump's strategy means for your money. If you're watching this video right now, you're probably worried about the stock market crash and you're wondering if you should sell everything before it gets worse. I'm Rivkin, and for over 26 years, I have been helping business owners discover hidden cash and maximize their profits. Today, I'm going to break down what's really happening with the market crash, why it's important to you, and most importantly, how you can actually benefit from all this chaos. The cash is the king, and during the market crashes, this has become even more true. What I have actually discovered working with business owners is that those who understand market cycles and know how to position themselves during downturns are the ones who create generational wealth. Let me tell you something that the media, all the social media, all these financial gurus isn't actually explaining clearly. This market crash isn't just a random thing. There are three specific triggers behind it, and they're all connected to one person, Donald Trump. Now, this isn't about the politics. I'm not going to be talking and taking any sides. As a financial expert who has been in the industry for over 26 years, my only concern is how this impacts your money and what you can do to protect and grow your wealth during this time. So the first trigger is the Trump's trade war strategy. Trump positioning himself as the ultimate deal maker who fights for American jobs. But these trade wars could significantly impact your weekly expenses and potentially trigger a recession. As history repeats itself, let me share a quick history lesson with you. Back in 1930, the US government implemented the Smooth-Hawley Tariff Act. What it did, it placed huge taxes on imported goods. At first, it seems like a good idea because the strategy for that was to protect American businesses. But what actually happened? Other countries saw that and then they decided to fight back, and then they came back with imposing their own tariffs. And then what happened is that the businesses collapsed and millions lost their jobs. So instead of fixing the economy, what actually happened is that it helped to turn a regular recession into the Great Depression. So fast forward to today. Today we see the same patterns. Trump imposes a 10% tariff on Canadian energy and 25% on other goods. Canada replies back with a 25% tariff on US imports. In response, Trump escalates steel and aluminum tariffs to 50%. So then what does this mean for you? For you, it means that the higher prices on everything from buying cars and appliances to everyday essentials, stretching your household budget to even further. But here's my take on this, and this is very important. I do not actually believe that Trump wants to high tariff long term. As a business person myself, I recognize that Trump is using tariff as a negotiation tactic. Trump is a very good negotiator. And here's another thing to remember, that he is a business owner himself. After all, he is after free global trade, but on terms that are favorable to the US. The problem is that his approach has created a massive uncertainty in the markets. And in investing, uncertainty is one of the biggest killers of the confidence. So the second trigger is the NATO debate. Trump has questioned whether the US should continue protecting NATO allies unless they contribute more to their own defense. While this might seem fair, pulling back could actually weaken NATO, creating instability that Russia and China might take advantage of. Markets do not like uncertainty. When global security is at risk, investors panic. A weaker NATO could lead to more conflicts, increased military spending, unstable trade, and rising energy prices, all of which could shake in the stock market. The third trigger I absolutely love. And this is where it gets really interesting. So hear me out. This is what I call Trump's secret plan. There is a theory that Trump may actually be crashing the stock market on purpose. I know that sounds really crazy, but let me explain you why this makes financial sense and how it actually gonna benefit us. Trump has never been a fan of the high interest rates. He actually called them ridiculous and has openly criticized the Federal Reserve for keeping them tight. Again, remember that he is the business owner, he is an investor, and he owns lots of real estate and he takes advantage of leveraging money. So this is why this is very important to him, and he's not a huge fan of these interest rates. So here's the thing, the Fed is technically independent. There is absolutely nothing he can do to control or make them control their decision, and their decisions are actually based on economic conditions. It's not whether what he tells them to do, it's all based on the economic condition. So if the stock market crashes and the recession seems inevitable, then what happens is then the Fed has no choices but to cut interest rates to prevent a total meltdown. But then why would Trump want lower rates? Well, it's very simple, and it's all about the money. The US government is drowning in debt. We're talking about 36.5 trillion of debt. When interest rates are at high, the cost of servicing that debt is skyrocket. So let me break this down and show you how this works in numbers. So let's say you have a credit card debt and you owe $30,000 with the 20% interest rate. So what it means that you're paying $6,000 just in interest every year before you even start paying down the principal. Now, let's imagine your credit card company cuts the interest rate from 20% down to 3%. So now instead of actually paying the $6,000 in interest, you're only going to be paying $900. So that's $5,100 every year savings. So now this is exactly what could happen with the national debt. And we're actually talking about trillions of dollars. If the Fed lowers interest rates, the government can refinance the debt at a cheaper rate, saving billions of dollars on the interest payments. This wouldn't be the first time something like this has happened. And if Trump can create that opportunity on purpose, it could be one of the smartest economic moves in history. And if this theory is true, we're not looking at the long-term economic collapse. We're actually looking at the temporary shake-up before a massive rebound. So the question is, how can you benefit from the crash? So you're probably wondering, how can I benefit from all this chaos that is going on? Well, the stock market crashes aren't rare disasters. This is a normal part of investment. This is the life. This is the economics. This is how it works. Whatever goes up, goes down. Whatever goes down, goes up. So every few years, the market take a hit, people panic, and headlines scream that it is the end of the world and the market is crashing. But here's the thing, the history tells us a different story. Remember, history repeats itself. So every crash of the US market has been followed by a recovery. And this is very important to remember. So those people who actually panic and sell are those that typically lose money, while those who stay calm and invest strategically often come out on top. So it's very important to stay disciplined, to stay focused, and instead of freaking out, this is the time to prepare, make smart moves, and set yourself up for massive gains when the market bounces back. So here are the 3 steps you can take right now. Step 1, invest while the market is down. So here's the thing, before you're gonna start investing, what I always suggest is that make sure that you have an emergency fund, and it should be at least 3 to 6 months. You definitely do not wanna invest your last money, and if you're living paycheck to paycheck and you have whatever little money you have left as your cash reserve, I don't think that would be smart and great idea to go and start investing. But if you do have money, if you have prepared yourself and this is your not last reserve, then I would definitely suggest to take advantage of this opportunity. So let's assume you do have money and now you want to start investing, and you have this cash reserve, and this is your not the last money that you want to start playing with. So now would be the best time to start investing. As you remember, whatever goes up goes down, whatever goes down goes up. So now is the perfect time. All these stocks right now with the market crash, you're buying at the sale price, right? How nice is that? That when you go purchase the car at the sale price, or purchase the clothes or the food at the sale price. So this is exactly what's happening with the stock market when the stocks are actually crashing. So let's go back to 2008, the financial crisis. If you go back and you see at the patterns, you'll see that the stock market crashed. And if you would have invested at that time when the stocks hit that bottom, then a couple of years later, the stocks went back up. While many of you during that time actually panicked, what it meant is for those that panicked, who didn't stay disciplined, who operated based on the emotions, that means that they lost money and they missed up on all these exciting opportunities. The thing is that no one can perfectly predict the exact bottom line of the market. If you invest consistently while prices are low, you will be buying assets at a discount. Remember, the cash is the king, and right now, your cash can buy more in the market than it could just a few months ago. Step 2, stay disciplined and think long term. Whenever the market crashes, it doesn't just happen randomly. There's cycles, and the cycles are predictable. And typically, we're talking about 3 different cycles. So one of them, it's the correction. Typically, when correction happens, then the stocks drop 10 to 20%. And this happens frequently and a part of the healthy market. The second cycle is the bear market. So typically it's between 20 to 40% drop. This happens every few years and lasts about 289 days on average. And lastly, the third is the full collapse. So typically when this happens, then the prices drop more than 40%. So this happens very rarely, but then when it does happen, history shows that the market recovers. And if you are the lucky one that can get into this full market collapse and buy at the discount of 40%, then staying disciplined, you can actually make lots of money. The biggest mistakes new investors make is letting emotion dictate their decisions. And I'll share with you something, I had many times when I got caught in these cycles, and then my emotions unfortunately overpowered me being disciplined, and this is typically when you lose money, and that's kind of what happened to me. But staying disciplined, not letting your emotions take over, that's when you actually can make real money. If you're already investing, then the worst mistake you can make is panic and then sell everything that you have. Selling while the market is down, it's not a good idea. You're liking your losses, and then you preventing yourself from making money and then from letting the stocks to recover, waiting for the market to go up. Instead, consider increasing your investments. Take advantage of these massive opportunities. Look at buying these stocks at the cheaper and discounted prices. Stick to a long-term strategy. That's why I mentioned, if this is your last money, reserve money, the money at some point that you rely on living and paying your day-to-day expenses or some emergency funds, this is why it's not a good idea to invest them. When you're investing, make sure that you're putting the money, you're putting them for the long term, you're forgetting about them, and you're allowing the market to rebalance when stocks are crashing. And remember, the best investors see downturns as a chance to buy more, not a reason to run away. Step 3, diversify your investment. Putting all your money into one type of investments, it's a recipe for disaster. Look at it this way. It's the same thing as they're saying if you're gonna put all your eggs in one basket. If that basket drops, then you're losing all of your eggs. So I wouldn't suggest to take advantage of that strategy. The key to surviving a market crash is when you actually have a diversified portfolio. It's spreading your money across different types of assets. So like for example, my portfolio includes stocks, I have bonds, I have US Treasury bonds, I have private equity, I invest in real estate, I have even crypto, I do private lending. So my portfolio is very, very different. And the reason for that is typically when the stock market goes down, and then you can still have this cash flow from the real estate, then you can still earn your money from the bonds. And then when the bonds go down, then the stock goes up. So you see, like, this is how it all correlates. So a couple of years ago, when the stock market was going down, the bonds that I invested into inflation bonds. Inflation was very high, and I was making like 11% interest. So last year, the stock market went up, and then my bonds went down. But you see, this is how you diversify your portfolio. It's also worth considering maybe dividends paying stocks. So there's stocks, those that pay you dividends, and they typically perform very well during the downturns because they generate passive income even when the prices are low. In closing, market crashes aren't the end of the world. If you understand how to navigate them, you won't be the one panicking. You will be the one taking advantage of the opportunities while everyone else is running for the exit. This isn't the time to fear the market. It's the time to prepare, invest wisely, and stay patient. Everything that I'm sharing with you, everything is based on my opinion, on experience, working with the business owners, investing myself for over 26 years. So I'm not a financial advisor. So everything that I'm sharing with you, it's based on my own experiences, my own researches, as well as my own investments. The ones who make the smartest moves now will be the ones who come out on top of the market rebounds. If you found this information helpful, please like, share with other ones who need this advice, and subscribe to my channel. And remember, financial freedom is all in your hands. I will see you in my next video.